Hey traders, it's Leaf West again. I'm going to look at two opening range trades I did today in Netflix. Both were good. The second one much better and got exactly what I was hoping to get. In essence, an opening range trade is playing a stock when price moves out of an opening range that was established first thing in the morning and reattempts or attempts to get back into the range. And if it does that successfully, what it will normally do is go to the opposite side of the range. So it either fails in its attempt to get back in the range, or it gets back in there, accepts it, and moves to the opposite side, and often breaks through the other side of the range and continues on either higher or lower, depending on which way it's heading when it goes to the other side. Now, Netflix was a stock that we all know what's happened in the last couple of days. Extremely oversold stock, and a perfect candidate for an opening range trade today, as I'll point out. What happened this morning was we had a slight gap higher with the market, and the stock sold off. We had selling right off the first bar. You can see that stock basically opened at 78.85 this morning and sold down relatively quickly in a big range bar. I looked at this chart the first time when price was below the opening range, and it immediately highlighted to me a potential opportunity. Because of what's happened the last couple of days, I thought that it was probably all the selling was probably done. It was oversold, and a potential short squeeze, and the stock could move very quickly, a very long way. And second of all, when I saw the size of the opening range, I thought this could be really juicy. So I set my audio alerts. Let me just move this to a 1 minute chart, and then we can see it better. Get to the start of the day. Okay, here we go. So I saw the chart for the first time when price was below the opening range. And so I set my audio alerts for right at the opening range. And I don't normally get too excited when it first goes back because it has to prove to me that it wants to stay there. And these are 1 minute bars, so it was in there for 4 candles, 5 candles, which is not a big deal. And price stayed around the opening range, so I wasn't gonna buy that first move. I always like to see what happens when it pulls back out or tries to pull back out. And sure enough, price here pulled back out, made a higher low, which was good. So my thought was to get involved in the trade. And what I will do is look for a pattern to set levels off of. And to me, this was a perfect contraction pattern. You had swing highs, you had a lower swing high, and you had a higher swing low. So I like to draw retracement grids off that. And this is the pattern actually I had, or this is the lines I used this morning. And let's just take a look at those lines a little closer. So here, you can't see it now because it's faded, but if I go back, here's the opening range. But let's look at the grid. The key levels are 61.8 and 78.6. When price shows that it'll accept these levels, then you're likely and liable to break the high of that range or that contraction pattern. So I was adding, I think 3-4 spots in this trade, and it was working out basically how I thought it would work out. But what happens in these opening range trades is that either it's going to work for you and just take off and go to the other side of the range, or it's going to muddle and fail. And it doesn't necessarily have to muddle and fail right at the start of the opening range. It can go up to the first target, which it often does. And if we look at this in isolation, what normally happens in these kind of contraction patterns that I play is that you'll get to that first target fairly easy. So I like to take profits there, which is what I did today in Netflix. And then I raise my stop. Usually I'll raise my stop to halfway between the 61.8 and the 78.6 level, because price will normally pull back to this 78.6 level or the 61.8, and then if it's going to work, it'll start to reaccelerate. But if it's not going to work, it'll go down and take out this 38.2 level, and basically the trade is not going to work. So you want to be out of. You want to have your stop up there, so you get stopped out, and at least you have potential for making a small gain and not get hurt on the reversal of the trade. So that's what happened here. So price went up. I think I took a third off at my first target, and I raised my stop, and I got stopped out in the last bit. So it was a small winner, and price moved down bounced off of or bounced around the opening range and then failed and left. So I'm not interested in shorting the stock, so I'm not looking at it here. But what I did do is I set up an alert for roughly 10 cents below the opening range because I wanted to get involved again in the trade. So a little while later, my alert goes off because prices come back up to just below the opening range. And so I come back and I look at the chart and I see, okay, we've made a new lower low, and I want to draw again. I want to draw a retracement grid off of that somewhere in this chart, and I do it off of a potential low of the day. That's a potential thing I call a key pivot area. Um, um, so let me draw that. Let me show you the grid I had up for that. Take the first one off, and here's the one I had up for that. So we broke that pattern and we based above it, which is a better way to break a pattern for me because it shows that you don't lose all your energy shooting up straight up and then have to come back down and confuse traders and discourage traders from getting involved in the trade. Um, so again, here's the bottom of the open range. So we consolidate above the breaking of that key pivot key pivot price. We break back into the open range, couple of dojis, break back out, but what's most important is what got me involved, got me long on the stock, was that we snapped right back into the opening range. And Winston Tisley, Winston, whatever his name is, from T2 Partners, was talking up his going long Netflix at during the lunch hour fast money program, and that helped get this trade going. So my once I got involved, and again, what typically happens is we couldn't sell off from the failure of this pattern earlier. We went down, made a new low, and then bounced right back up and wanted to get back into the opening range pattern. That's a great sign that the potential of this trade is even better than it was for the earlier trade in the morning. So my first target, based on this grids again, wasn't these low targets just inside the opening range. It was 77.66. That was my first target. But as we progressed up here, I looked back at the failure we had this morning's level, which was 77.33. I think was our target from that first. Yes, no, 77.30. So I took off a third at that 77.30, and then another third at 77.66, which was my main target for this move. And then I moved my stop up. I think I moved up to 77.50 because I did not want to have happen with this trade what happened with the morning trade where you had a quick failure and pull back. I wanted to make this a good winner because I had a good position in this. And my next target was the high side of the opening range. So it was I don't know 78.85 or whatever it was. I'm getting close to our 10-minute limit on these YouTube videos, so I'll try and be quick. So we quickly went up there and I sold at my targets. I don't question that. When I do these calculated trades, I just set my levels and I stick to them. And what happens again? You break through and you pull back. And again, here was a good sign to break through again. So if I was, to me, the trade here, the low risk trade was getting involved in the low side of the opening range and playing it for the upper side of the opening range. It wasn't to get involved in the trade or try and extend the trade beyond that. So I wasn't even interested in looking at this trade from that perspective. Let's go back to that 3-minute chart because you can see it probably better. So to me, this wasn't a get rid of this grid. This wasn't the spot to get involved when you made new highs of the day. Because what happens? You break two new highs. What happens? You go up a little bit, and then you get price stopped out as price pulls back. But if you were really anxious to stay involved in this trade, you could have extrapolated where the potential target was based on this pullback, and you would have said that the target range was right here, which is exactly where the highs of the day were. So if you're going to get involved, as you didn't play the opening range, that's what I would have done. I would have looked for this break, the pullback from the break, which if you look at and see how big the pullback was, I don't even know what it was. basically was just above the 50% level. So again, it didn't quite make it to the slot, but we were able to see a good target zone for that last trade, playing for the break of the top of the opening range. All right, I hope this helps, guys. Thanks very much. Bye.